Go ahead and get started with the market. We take a look at the S&P and kind of wondering, has the Federal Reserve become the market whisperer? We had the big rally after Chairman Powell's speech last week, and then we come in and we have the market turnaround today. Today we had Governor Waller speak, and what I wanted to show you, this is a 3-minute chart of the S&P futures. You can see the timestamp down at the bottom. 12:27. He started speaking at 12:30, right where that next green bar is, and then you can see what happened. He wasn't even talking about the markets, he was talking about cryptos. So we had a pretty good rally, gave some of it back, and then rallied into the close. But a decidedly turn. You can see we were headed lower until Governor Waller started speaking. So what does that mean as far as, do we all of a sudden have this calm about the Federal Reserve and confidence in what they're doing? It was interesting, just the timing of the turnaround today. Nonetheless, we kind of finished basically flat on the day, right where we were yesterday, and below the 10-day moving average again. Last night in our insiders meeting for our alert subscribers, I mentioned that today was going to be interesting to see, was there a follow-through day to the downside below the 10-day moving average? Can't really call that a follow-through day. It's really just a sideways day. So I can call that consolidation right there around the 10-day moving average, which means we're still watching this zigzag pattern that we've been talking about for the last couple of weeks that has a potential to move up there to 436, 435 or so, also right in the middle of the projected 5-wave tap box. Again, this wave 4 is just a projection. If the wave 4 were to start now, it's not telling you the wave 4 is underway. That's a projection if. Right now, the wave 3 is the currently labeled wave, so technically we're still in a wave 3. We do want to see that if we're bullish to turn back around, but having a little bit of resistance and give back after hitting the 61.8% fib extension, I don't think is a big negative for the market at all. In fact, I think the market activity today was pretty constructive. There was $1 billion. They give you the market imbalance going into the close. There was $1 billion imbalance to the buy side today. So that's a lot of money moving into the market at the close today. See what that sends us looking for at the beginning of the week next week. So I thought I'd go ahead and bring up the VIX. For those of you that want the market to go to the downside, this is what you've been hanging your hat on, the fact that we've got a really low VIX. Now remember, when a wave 5 pattern ends, the retracement is supposed to go to the previous 4. And so my commentary has been, I really think the market can handle that, a bounce back up to say 25, 26, and seems to be what we're doing right now. But on the bullish side, to have the VIX moving up over the past couple of days and not really a significant give back in the market, especially not today, I think that's constructive for the market moving forward. Now, if we move up and we take out this wave 4, that's a whole different story, obviously. And so if we take a look at where the 10-day moving average is, and we're actually a tiny bit above the 10-day moving average now on the VIX, which means, you know, we could actually come back down a little bit on the VIX to start the week. There's some resistance right in through that area, right where we touched on the high today. Looking at interest rates continue to go to the upside. Same scenario here. If the wave 5 is ended, we're supposed to go back to the previous 4. And you've heard me say numerous times that as long as we stay in this trading range here between this wave 5 low and the wave 4, I think the market can handle that. What I don't want to see is a breakout of either one of these sides. If the interest rates break too high, I don't think that's constructive for the markets. And if we break too low, I don't think that's constructive for the markets either. And that might seem counterintuitive, but my point is, if that we're going down here, yields and prices move in inverse directions, as you probably know. So if we're getting yields that are going down that far, meaning that there's that much money coming into the bond market, that money is leaving the equities market, that's not constructive for the equities market moving forward. So see how that plays out. All right, taking a look at some of our other markets, we take a look at the Dow. We still have on the DIA this big, huge triangle. No breakout from last week. Amazing that we stayed in this triangle for the entire week. I kind of like to take the Elliott wave pattern off, because when you have these triangles, even in the words of Elliott, they supersede what the wave count is. So it's easy to look at this and say, that's going to break to the upside. Look at that wave count. We have the wave 4 right at a 50% correction. We're going to break to the upside and go make a new wave 5 high. But if you really read what Elliott wrote and the information on corrective patterns, a triangle pattern can break either direction regardless of the wave count. So I like to take it off and just say, hey, we're going to get a significant breakout on the DIA. Didn't happen this week. Maybe it happens next week. We take a look at the Qs. Also, right down here, closed right on the 10-day moving average yesterday, a little bit below it today, but we held 300, which is the level I think is the most constructive for the Qs to hold as far as a potential to move higher from here. So we've got a bit of a doji right on the 300 level. Beginning of the week, going to be really important to see how the Qs play out. Looking at the Russell, we talked about this last night as well. So we powered through that 190 level. As you know, we've had the trading range from 190 to 170. It's been going on for a while. So now we've broken that. And now we look to see, are we going to have a new trading range, which happens to coincide exactly with where that wave 5 projection is at 210. So are we moving back from 190 to 210? If so, we need to hold this 190 level. We did today. Can we hold it at the beginning of next week? Looking at the 10-day moving average, a tiny bit oversold, but not a lot. So anything could happen here. But for the IWM to move back to the upside and 190 to now become support, which was resistance, it's got to hold here at the beginning of the week. All right, now taking a look at some stocks of interest. Bitcoin, been commenting how Bitcoin had been pretty impressive, holding the 10-day moving average right below that 24,000 level. Well, it gave it up today. So a move to the downside today. It looks like perhaps we are going to come down and test that 20,000 level. Seems that way now. It's also where the 50-day moving average is. I don't think that's a big negative for Bitcoin. Obviously, would have been a bit more positive if we could have held this 10-day moving average and broken above 24 and run up to test that 28 level, but it just wasn't quite ready yet. So perhaps we come down, test 20,000. Is that indeed now support? And then move back up to 24. So we got a little work to do before we start talking about any sort of another potential move back up to the 28,000 level. Some stocks of interest, again, with Tesla. Everybody wants to talk about Tesla. We had this big run. I thought we would go up to 160 because that's where the big downward move was. We did that. Now we've relabeled into a 5-wave pattern to the downside, which I think is warranted. I didn't really think we would make it all the way back up to 200, but we did. And so now that's acting as a bit of resistance. So we gapped up yesterday, back down, still above the 10-day moving average. So could this pattern become disqualified? It could. But it's a pretty well-constructed 5-wave pattern to the downside with a wave 4 right at a 50% correction. So I think we need to be careful here. If you're long on Tesla, I would watch this. Can we get back above? Can we hold this 200 level and get back above it? Even if it goes sideways, give a little bit back to the 10-day moving average, but not too much. Don't give up too much of this 200 level if we are going to try to make another run back to the upside and even potentially back at these levels from August and September. So holding 200 is key there. That's going to be really important at the start of next week. A lot of chatter about net on Twitter today and with the or this week, I should say. And you can see that we actually had a strangle on this at EWO Trader for our alert subscribers. And it broke out ahead of earnings, which was really interesting. And we went ahead and closed it out and took the extra IV priced in before the earnings reports. The earnings came out and it's kind of gone up and down, but a bit sideways. It's really just consolidating this big vertical move that we were able to capture on the breakout of the triangle pattern. So, you know, if we can just consolidate here on NET and stay around this 60 level and perhaps start to creep higher, I think this has a chance to go up. It was a pretty good earnings report if you've looked at it, and maybe test that level at 80. So consolidating this overbought condition without a whole lot of give back, that's bullish and constructive for the potential of NET moving higher. Boy, the big news of the week, I'm sure you all saw this, the Microsoft, Google stuff. Microsoft had this big move. It gave some back too, but now all the chatter is with Google's goof, if you will, on their AI chatbot thing not working properly. Is Google going to take more market share? Is Bing going to become more of a search engine? Not more of a search engine than it is, not more than Google. And a lot of people commenting, you know, Google it is kind of part of our nomenclature now. Are we going to start saying Bing it? I don't know. I'd actually like to know your thought. Do you think Microsoft with Bing becomes a significant challenge to Google's dominance in the search world? leave a message under the recording. If you're not watching us live, put a message in the chat box if you want to. There and give us an idea. By the way, I'll ask Zach to put a link for our Trade Finder that we do every Tuesday night. We have a lot of viewers that join us. It's free every Tuesday night at 9 p.m. Eastern time. We talk the markets, we look for trade ideas, and then we have a live Q&A at the end. So I'd love to have you join. So hopefully Zach will include that in the link, or you can go to ewtrader.com and find the sign up for Trade Finder there. Again, it's totally free. Love to have you. So here's Microsoft with that pretty vertical move to the upside there. Came back a little bit, but notice that we are above an important level of 260, and we're well above the 10-day moving average. So looks pretty constructive as long as we can hold 260 with Microsoft for it to turn and go back to the upside. These kind of moves never hold. That's why I'm always talking about I don't like vertical moves. Vertical moves get retraced, and that's exactly what happened. You go straight up, oftentimes you come straight back down. The key is how far down. So if we can hold 260, hold the 10-day moving average, I think that's constructive for Microsoft to turn and go higher. And then the mess of Google. But watch this. I think this selling in Google is a bit overdone. I'm going to try to look to take advantage of that at the beginning of next week. Just wanted to see if it could hold this level here, which it did. You can see the correction is right to that fib 61.8% level. Look at that, 61.85%, dead on that fib level. It should act as a pretty strong level of support, and so far it has. So we're holding both this price level of 95 and that fib level of 61.8. We still are below the 10-30 and 50-day moving averages. But if we see any sort of a turn back to the upside there, I think perhaps we could have some movement back to the upside with this zigzag pattern that looks really well formed to me. So the keys are going to be, can it hold right where it is? It did today. That was pretty interesting to me. A couple international markets real quick. Kind of joked about this in Trade Finder Tuesday night about how popping the balloon seemed to pop all of the China stocks. So it popped the balloon in the FXI as well. So we've come back down here and we've had a little bit of a correction, but if we can hold 30 here, which it looks like we're trying to do, then maybe we start to get chatter going back to China coming out of their lockdown, et cetera, and the potential moving forward economically versus all the talk about the balloon and everything else. But we have held the 50-day moving average. We've held an important level of 30, and we've stayed above the wave 3 high. All those are constructive and important. And then the India market, the INDA with Dina, all that mess that's been in the news, and trying desperately to hold this 40 level if we can. That's solid, but we have a pretty well-formed 5-wave pattern to the downside here. It feels more like, with everything that's been going on, that we got a bit of an oversold bounce here, and that we may want to come down towards this 39 level. You can see where the 5-wave projection is, and test that lows from June, the previous wave 5. Just seems like that's in the cards. We rallied back up to the 10-day moving average, but as you can see, I've not been able to get back above it. So it seems like just an oversold bounce on perhaps a little more of a drift to the downside there on the INDA. That's everything I had prepared to share with you, Zach. If you got a couple questions, we'll take those, and then we'll send everybody out for their Friday evening.
Awesome. Sounds good. Yeah, it's great to see that Trader Chuck made a appearance on today's Friday U.S. Market Update Live. Being here in Texas, I've seen a number of cowboy hats. So,
oh, is that right? Okay, cool.
Yep, it's something I've become accustomed to now. So, we'll start out here with a question.
If everybody wonders where it came from, it's that picture right there. That's what started all the whole Chuck Norris comparisons and stuff. So,
oh, I can certainly see the resemblance. That's for sure. No question. The hat is spot on. So, we'll start out here with a question from William, who would like to look at Boeing.
Boeing, okay. We'll take a look at Boeing. I like to look at Boeing as well. A lot of people think that that's a good indicator of the economy. Their backlog on planes is startling. So, I mean, if you own a business, you want to have Boeing's issues now, not the issues that they've come out of, but now they've got more work than they can handle. But the key here is a really nice sideways consolidation. So this is kind of a stair step pattern where the stock goes sideways, then it goes up, then it goes sideways, and then it goes up and goes sideways. So it's like stairs going up. You know, you have the flat area, you take another step, different than the more 45-degree angle move or the impulse and corrective moves. We have an impulse and a consolidation move here. So it looks to me like Boeing is kind of ready to take that next step to the upside. And the key there, if you wanted to be a bit more conservative, let it get above 220 first. If you wanted to be aggressive, we are above the 10-day moving average. That's pretty impressive sideways consolidation. So, and I think an aggressive move could be to go long now. The more conservative one, show me, do the Missouri thing and get above 220 first.
Awesome. Thanks, Rob. Alpha Oscar would like to look at Google and Disney. So we already looked at Google.
Google.
I don't
So
know
yeah,
if maybe
let's
you want
take
to
a
look
look
at the
at
one.
Disney. Yeah, let's take a look at Disney. Huh? What's that?
Or I didn't know if you wanted to look at the other Google. If
Yeah, the charts are pretty similar. So
yeah,
they're both looking like they're about ready to go. So we'll leave that. But Disney had this big move. You know, Iger just announced he's going to lay off a bunch of people. A lot of people feel now, you know, there's a whole different thing about, you know, if you work for Disney, you're probably not happy because he's laying off a bunch of people. But if you own the stock and you want the stock to go higher, that's what Iger is good at. Now we did break below the 10-day moving average today, so I think that's worrisome. So if you're long Disney, I wouldn't get out yet. I would wait to see, hey, can we turn around and get back above 110? If you're wanting to go long Disney, I would say you got to get back above 110 first. There is some decent separation here between the 10 and the 50-day moving average. We're not overbought from the 10-day moving average. We were at the open, but we gave all that back yesterday. And so then today, a lot quieter day. So that's my viewpoint. If I was long, I'd hang in there and see if there's another follow through to the downside. Then I may want to take some gains if you caught this move. But if you're looking to go long, I'd say let this one. I wouldn't be so aggressive here because it's had a pretty nice move off the low. I'd say get back above 110 and we'll see what happens from there. Let's do a couple more and then we'll send everybody out.
Couple more. Sounds great, Rob. So we'll go here to WT would like to, actually we'll say YJ Kim would like to look at Etsy.
Symbol?
I think it might be ETSY. Let me double check.
Oh, Etsy. Okay. I thought you said Essie. So yeah, couple rough days here. Was that earnings? So moving lower here, and then no, it's not. So come back to test the 50-day moving average. If you're long here, you certainly would have wanted to see it hold this 140 level. We got overbought, no question about that, at 150. Coming back down to 140 would have been normal. It didn't hold that, so now it needs to hold 130 and the 50-day moving average. So if you're long here, again, I would give it a little bit more leeway, perhaps add to it if it bounces back up off this 50-day moving average and 130. If it breaks that, you're going to love this, Zach. It's Katie bar the door to the downside. I think we come back down to the previous four, and that means the wave 5 is done. The wave 4 went to 61.8, which means we could have a wave 5 extension as high as 100%. It hasn't done that, though. So if we start to break more, then it's telling us, hey, that wave 5 is done, and we may see 110 to the downside here. But before we get there, we're a bit oversold right now. We're on the 10-day moving average. You could even probably get a little bit of an oversold bounce at the beginning of the week as it tries to hold the 50-day moving average in 110. But as far as a new long, it'd have to get back above 140 for me. And then if I was long, I'd be worried if it breaks below 130, I'd say, hey, it's time to get out.
Awesome. All righty, you got time for one more?
One more, and then we'll call it a night.
All right, you got it. So WT here was asking for Tesla, and we had another request for Tesla from GDAD, which you covered a bit earlier. So I just wanted to remind everyone to go back there. This recording will be available very soon after the live session's over, so you can catch Tesla and Rob's analysis for that here very shortly. Same thing for Google. I saw we had a request there from Alpha Oscar as well. So Rob covered that a bit earlier. We'll finish here with the last symbol for coin from WT.
Oh, okay. Yeah, it'd be interesting to look at that with the move back down in Bitcoin. And as you would expect, move back lower here. We got overbought. We actually talked about this in Trade Finder too. We got a bit overbought here up to that 80 level. And for a few days, it looked like some really constructive consolidation. So remember what we talked about. Two of my rules here. I don't like it when things go vertical, because when they go vertically up, they come vertically back down, and no security in any time frame gets very far away from the 10-day moving average. Both of those occurred here on coin, so a little bit of a move back was warranted. What would concern me here is that we gave up 60 today, so a move back down from 80 to 60. Because you can see how it was support all through August, September, and October, and you wanted that to act as support here, even if it gave up the 10-day moving average a little bit like yesterday. But yesterday we held 60. We didn't hold it today, so that means now, are we going to get a follow-through day back to the downside at the beginning of the week? We still have the 50-day moving average, and that could be all this is testing the 50-day moving average. But if we don't hold that, then I'm afraid we are probably coming back down to this 40 level, but a little too soon to call it that. Let's see if we can hold the 50-day moving average and get back above 60 at the beginning of the week, and then maybe we can consolidate a bit here on top of 60 like we did in August, September, and October, and this time try to make a move back to the upside. That would be the most constructive thing. Thanks for spending some of your Friday evening with us. Hope you have a great rest of your weekend. Look forward to talking to you again soon.